Hi everyone, it's Lorenzo di Mattia, manager of Edge Invest Sibilla Macro Fund. Wanted to tell you what happened in June, which was a very good month, and give you the outlook for the rest of the year. June was our best month since the inception of the UCITS, our best month in 6 years, as a matter of fact. We were up more than 4%, so pretty happy about the numbers. We had two assumptions. One was that the trade war would not escalate beyond a certain point. Main reasons are that Trump is losing in surveys against Biden, the Democrat, and people still don't talk about it, but Trump is not as popular as he used to be in 2016, and we saw that already in 2018 in midterm election, but it dropped further. So Trump has to be careful in escalating too much and creating too much uncertainty in the economy. And we saw that with Mexico. He's very emotional, and he realizes he made a mistake. So not only didn't he put tariffs on Mexico, but he signed a deal within a week. And this is a sign that he and his team realize that a full force escalation is not in his interest. So with this as a base case, and also we did work on central banks and concluded that the Fed was going to cut rates as soon as July. The market, when we took our positions, did not anticipate that. And the reason is the Fed is gradually changing its mandate. So it's focusing less on economic growth and more on inflation. I wouldn't say less on economic growth, actually, to be precise. It focuses even more on inflation. So even if economic growth is not negative, but inflation is too low, it would still ease, as opposed to the past, where the Fed would have much higher interest rates with these economic numbers. The Fed confirmed our view in June, and that's when we also added FX trades to our portfolio. We shorted the US dollar, which we believe will devaluate a little bit, against the Canadian dollar, the Norwegian krona, and the Russian ruble. We have positions long energy, which represents a very small part of the S&P today, as small as in 2004, when the bull market in energy started. It was extremely cheap. And we have two catalysts, the OPEC cutting and the IPO in Aramco, make us confident that despite a marginal economic slowdown, oil prices will remain reasonably high. And there is a restructuring in European banks. We're seeing the news today, actually, the Deutsche Bank. But that's not the only thing. People forgot. A TLTRO is coming with the ECB. It's a great news that Christine Lagarde will lead the ECB. It'll be very dovish. It will help the banks. And banks are like at 2008 valuations. So we're long these sectors in particular and some growth stocks. And we also shorted bonds because the repricing of rates in the second half will be higher, in our opinion, because bonds priced in a real deflation, which we don't see. So our base case is a continuation of risk on for a little longer, and then probably a correction late summer or the fall. But central banks will be extremely easy, and unless there is a big recession, which we are monitoring, we believe things are going to be okay for a little longer. Thank you very much.